I'm Emily Chang, and this is Bloomberg Technology. Coming up, Dropbox jumping into the public market with plans for an IPO the first half of the year. But can the company avoid the pitfalls of going public? Plus, changing passwords, locking up data on company-owned computers. Those are some of the steps Uber took to evade authorities in the past. We'll explain the company's RIPLEY program. And Facebook and Twitter have been under scrutiny over how they deal with online harassment. Now shareholders are speaking out. But first, to our lead and an update from AMD on the massive chip vulnerability known as Meltdown and Spectre. AMD says 2 of the exploits uncovered apply to its chips, according to an emailed statement from the company. AMD had previously said its chips were largely unaffected. Shares are falling in after-hours trading on the news. For more, let's get to our Bloomberg Tech reporter, Ian King. He is with me here. Ian, you've been covering this from day one. What did AMD say initially, and what have they now said today?
Right, you'll remember, Emily, that just before Intel held a conference call to explain what was going on, put a statement out there saying there's 0 to very little chance of us being affected by this, we're fine. Clearly that put them at odds with what Intel was saying, that this was an industry-wide problem, led everybody to believe that perhaps, AMD is a viable alternative here. Maybe they're safer, maybe this is a big opportunity for AMD.
Why would they say that, not knowing for sure?
That is a question that I would like to hear them answer. They've certainly not helped themselves by doing this.
And, what are the implications of this? How widespread, how much more widespread do we believe it could be as a result of AMD?
Right.
Or are these devices that already have other chips in them?
Yeah, I mean, no, the computers that are out there that are based on AMD processors are dependent on those processors. AMD did say in its update, look, we've got the patches on the way, we've got things covered, we're going to help, we're going to be fine, everything's going to be fine. But at the same time, a patch that Microsoft put out there on AMD-based machines didn't work. It froze them. That's having to be redone. That'll be coming next week. Whatever way you stack this, this just doesn't look good.
All right, Ian King, thank you so much for your update and your excellent coverage of this story over the last week. Now, to a Bloomberg scoop, Dropbox is said to have filed confidentially for an IPO in the United States. According to people familiar with the matter, Goldman Sachs and JP Morgan will co-lead this listing, which is privately valued at $10 billion. Dropbox could be one of the biggest U.S. enterprise tech companies to list domestically in recent years. First Data went public at a market value of about $14 billion in 2015, the biggest such IPO in the last 5 years. Joining us now, the reporter who broke this news, Bloomberg's Alex Barinka. So, Alex, we've been waiting for Dropbox to file, and now they have. What do we know about the timing here?
They have filed, again, confidentially. My sources told me that they're looking to go public in the first half of this year. So this listing could happen pretty soon among the ranks of Spotify and ADT, another 2 companies who are coming to market. Goldman Sachs and JP Morgan have been hired to lead this deal. Those are 2 firms that have worked with this company through their capital raising, their equity capital raising, and credit line extensions as a private company, excuse me. And now they're also opening up the books for pitches from other banks who want to help run this deal. So this is another one that we're seeing right out of the gate in 2018. And let me tell you, the folks who I'm talking to after we broke this news this morning are pretty psyched because we've been waiting for kind of a turnaround to see some of these bigger names start to get public. And this is a good indication that more might be to come.
We have been waiting indeed. What do we know about the price here and how, the potential valuation might compare with that $10 billion that they've privately raised?
So the folks that I talked to before this story went out said they expect this could actually price below that $10 billion valuation that the company locked in their 2014 private funding round. But they think that in aftermarket trading after this lists on day one, this could trade up through that. So where would that put this in kind of the world of IPOs? Probably down around 7 to 10 on the list in terms of size. If you think back in the last 5 years, Alibaba was obviously the biggest, raising $25 billion worth of cash from their share sale. Facebook, Snap, First Data, then Twitter. That's how you kind of march down the line here. And then you get into some of these smaller deals like JD.com, as you see here. So Dropbox, if they get something around $10 billion, and if I do the back of the napkin math, which is just my personal math, and they list the typical 10 to 20%, that's a $1 to $2 billion share sale. Those numbers are still to be decided on. There's no indication yet from the company how much they intend to raise, but I can tell you that that this will be a bigger one on par with Snap and some of these bigger deals that we've been watching lately.
So how do you think this will compare to things like Spotify, which is doing a direct listing this year, and other upcoming IPOs?
So those are kind of the two that might come in the next few months here. And you'll remember Spotify's means of getting public is a bit unconventional. They're not doing a classic IPO. They're just deciding to list their stock. There's not a big share sale like you see in the IPO process. So those are going to be two that folks will be paying a lot of attention to. But Dropbox is a different animal than some of the past deals we've seen like Snap. Snap hasn't performed well since it listed last March, but Snap went public as an unprofitable company. If you'll recall, Drew Houston did come out and say that Dropbox is profitable, excluding some metrics. They're free cash flow positive. He's pointed to $1 billion in annual recurring revenue at one point last year. So they're coming out with some financials that are a little bit unique in terms of the ranks of some of these bigger companies who are going public and asking the public market to bet on an unprofitable company out the gate.
All right, Alex Barinka, who covers the IPO market for Bloomberg. Great scoop for you today.
Thank you.
On Dropbox, thanks so much. I know you'll be charting it to the finish. Coming up, another day, another dark revelation about Uber, how the ride-hailing giant is keeping the police at bay with a secret weapon. That is next. And Bloomberg Tech is live streaming on Twitter. Check us out at Technology weekdays, 5 p.m. in New York, 2 p.m. in San Francisco. This is Bloomberg.
I say we take off and nuke the entire site from orbit. It's the only way to be sure.
That's Sigourney Weaver's iconic character Ripley delivering a classic line from the 1986 sci-fi film Aliens. And it is that line and character that served as the namesake for a top-secret program Uber has been using to keep police at bay. Here with more on this, Bloomberg Tech's Olivia Zaleski, who broke this story on Uber's panic button, if you will. Also with us, a man intimately familiar with Uber, Lane Castleman, managing partner at Greenbrier Partners, but before that, he served as Uber's head of communications in the Americas. So, Olivia, how exactly did this button work?
Well, let me give you some context first on what Uber was dealing with in 2015. The authorities, especially in the international authorities, especially in the EU, took a lot of interest, probably negative interest in what Uber was doing, especially around their belief that there may have been problems with tax evasion, violating local labor laws, and running up against transportation laws. So these authorities started dawn raiding the Uber offices abroad. Uber did not like this, and it developed a tool where it could remotely disable all the computers from its headquarters. It would push this button and it would shut off all the computers so that these authorities could not collect evidence.
Is this something they also used in the United States, or that was available?
We do not have evidence
in
that
the
it was used in the U.S. We only know about abroad.
So we do have a statement from Uber saying, like every company with offices around the world, we have security procedures in place to protect corporate and customer data. When it comes to government investigations, it's our policy to cooperate with all valid searches and requests for data. Lane, what do you make of this?
Well, I think it's important to look at the context that these raids happened in, right? We're not talking about the DOJ executing a lawful warrant. We're talking about foreign police authorities who maybe were influenced by a special interest group like the taxi industry, who were really tax collector offices, and maybe they were taxi commission offices who at the very reaches of their authority were conducting these raids for some information. So Uber was really defending themselves against some actors who probably were acting pretty poorly.
So is this program lawful, or does it matter?
I think, the question really should be, were the actions by these authorities lawful at the very beginning? In a lot of other countries, the taxi industry is huge. The U.S. has maybe 200,000 taxis, but Mexico City has 100,000. So the taxi industry is incredibly powerful and has the ability to leverage authorities in any kind of investigation they want.
Still, Olivia, this is the latest in a long line of stories about Uber that raise your eyebrows.
Yeah, I think what Lane brings up is a really important point. We have to look at the attention that they were getting at that time, and did these authorities have the rights to go in? But it's still super interesting, and it's also very interesting considering that the company is facing 5 government probes at the moment from the Justice Department.
So look, on that point, Lane, you can defend Uber all day long, but they are facing probes from the U.S. government into their operations, multiple probes, so many that it's hard to keep track.
But let's think about 2015. Uber was in a war for its life. It was battling taxi around the world. And most importantly, what were they defending? They were defending information about riders and drivers. We've seen countless instances of drivers who've been attacked by taxi drivers who learned their identity.
But we've also seen instances where Uber was basically stealing other companies' data about riders to, protect themselves in the United States. Grayball, for example.
Right. Look, Uber was definitely in a very competitive environment in the U.S., but I mean, I think we're talking about...
And acting illegally, potentially.
For sure. But I think we're talking about foreign governments who are probably using their authority a little inappropriately.
Olivia, what does this mean for Dara Khosrowshahi? As there have been a lot of skeletons in the closet. There could be more to come. Whether or not you describe this as a skeleton is debatable, as we're discussing here.
Right. I mean, I think that's an important point to keep in mind, is that there is a new guard at Uber. There's a lot of change happening right now, and the same things that helped the company grow so quickly, unprecedented growth, unbelievable, are also the things that are causing problems now. And it sounds to me that Uber's new CEO is really making an effort to make sure that these programs don't exist today, or if they do, that they're really above board and very sound.
So who at Uber knew about these programs?
So in the beginning, it was designed by the tech department, and then it moved into security, which was and then it was also in partnership with the legal department. What we understand to be true is that employees that worked on the program felt very uncomfortable with it, and we understand that there was a lot of gray area about when they could and couldn't use this panic button, essentially, but it was used consistently. We also know that the two people that oversaw the project have departed the company.
So, Blaine, on that note, is this something that you think should continue to exist at Uber, in light of obviously the continuing struggles in different countries?
So this was a long time ago now.
Yeah.
In the tech era, 2015 is ancient time. The reality is, my wife can remote wipe my iPhone, right, if somebody gets a hold of it. So really what we're talking about is Uber's ability to protect their data. Yes, they should have the ability to protect rider and driver personal information. Where you ride is your business, and the government shouldn't get their hands on it. While
you're here, I feel like we need an update on the SoftBank deal now that all of that has gone through. What are you hearing from the Uber community and former employees about the share sale?
Yeah, I think everyone's very happy the share sale went through. Those folks that elected to participate. End of the month is when it's expected to close, and it's wonderful that Travis decided to participate in it as well, because I think had he not, a lot of employees probably wouldn't have been able to benefit.
Well, what do you make of the fact that he has decided to sell such a large stake?
Yeah, well, the size of the stake, I don't really have any, thoughts on. However,
it is quite large.
It is quite large. But Travis is fiercely loyal to his team, and I think had he not participated, still, right? These folks helped him build the company, and had he not participated, probably would have impacted the tender offer from going through.
All right, Blaine Castleman, Greenbrier. Great to have you back on the show,
Emma.
and Olivia Zaleski, thanks for that great scoop today. Great reporting by you. Well, Apple could get a $4 billion boost from the new tax overhaul plan. A timing loophole could benefit those companies whose fiscal quarters don't follow the calendar year. Offshore funds could translate to one last tax break for companies like Apple, Microsoft, and Cisco. And Google is making a push to be a bigger player in the digital assistant market. The Alphabet company is trying to gain on rival Amazon in that market. Google is said to be considering the launch of a revamped online retail site with Google's digital assistant at the center of it. Google is also discussing a strategy for buying products and services via the Assistant. Google Assistant now runs on 400 million devices. Coming up, there is a new player in the cryptocurrency market. How MONEYGRAM hopes Ripple will speed everything up. That's next. This is Bloomberg. There's a new name being associated with Bitcoin, the U.S. Marshals Service. The Marshals will auction off nearly 4,000 Bitcoins, valued at nearly $5 million. Those Bitcoins were seized in connection with a number of high-profile federal, state, and local level cases. Those varied from drug busts to money laundering. The sale will take place during a 6-hour period on January 22nd. Participants are required to make a deposit of $200,000. Another mainstream adoption of cryptocurrencies, and this time it is MONEYGRAM getting in on the action. Shares of MONEYGRAM climbed the most in 10 months after saying it was working with the blockchain startup Ripple. It'll be testing the use of cryptocurrency to move funds. Let's bring in our Bloomberg editor-at-large, Corey Johnson, who is in New York, who's been covering this story. So they mentioned speedier transactions here, Corey. What does this mean?
So when I first ever heard about Bitcoin, when I first thought about Bitcoin, I think for a lot of people, their first notion of Bitcoin and then later cryptocurrency and blockchain, you got to think about the business of Western Union and MONEYGRAM, moving money across borders, getting it there quickly with lower fees. If you are a foreign worker working in the U.S. and you're trying to get money home to your family, you go to the 7-Eleven and try to transfer money using MONEYGRAM, using Western Union, a Western Union store. The fees are enormous and outrageous, and the process is slow. The idea that you could move money like you could move email is a dream, and that's what Bitcoin seemed to promise. That's certainly what Ripple seems to promise. MONEYGRAM and Ripple are absolutely in competition with each other. To see these two businesses come together and see MONEYGRAM look at a way to move money faster is an amazing thing. It will give them a leg up over competitors like Western Union, but it also massively erodes their business model. It's interesting to see these guys, I think, probably smartly recognize that they've got to get ahead of this train or they're going to be under the tracks.
So, we've spoken to the Ripple CEO recently. Let's take a listen to what he had to say about the future of cryptocurrency as he sees it.
There's no doubt 2017 has been, amongst other things, the year of crypto. And within the year of crypto, XRP has outperformed every other digital asset out there. So year to date, as that chart showed, we're up about 20,000%.
It's interesting to compare Bitcoin to, a slower sort of credit card-like transaction. Do you think that cryptocurrencies like Ripple or Ethereum could surpass Bitcoin or come close?
Well, look, I think that that's why this show exists, right? It's so we can have an understanding of what these technologies are, not just show squiggly lines on a screen. And when we get to a place where we're talking about the efficacy of blockchain technologies and even currencies that use blockchain, rather than the price is up, the price is down, that's when we've elevated into a conversation about actually what these things are and what they might be as a business. I thought it was really interesting what KODAK had to say. I talked to the CEO of MOVIEPASS, so the company that owns MOVIEPASS. MOVIEPASS is a really interesting startup that actually has a public structure that's very complicated. The business of MOVIEPASS is really simple. It's Netflix for the physical movie theater by one of the Netflix co-founders. And I talked to the CEO of MOVIEPASS yesterday about their notions of using blockchain and what they're actually going to do with it as opposed to talk about it. And listen to what he had to say about how blockchain might change business.
It is.
Is it 20% more valuable than it was yesterday?
It's worth more I think the public doesn't quite understand that we're on the verge of disrupting the whole way, not only the way you go to movies, but the whole distribution of content.
And that's the thing. It's the notion of distribution of content, and not just how MOVIEPASS might use something in blockchain, and they say they're going to do it within 9 months. But how lots of businesses out there, I fully expect we're going to hear from lots of other companies about how to use this technology to solve old problems. Then we can get away from squiggly lines in a stock price and actually understand how technology is changing business.
Right. And how do you know, Corey, when some of these businesses are using this genuinely and not just to generate buzz?
Well, I mean, look, I think we can look at some cases as being kind of obvious. When you see companies change their name and do things to sort of have a short-term effect on their stock, and it seems to be that the only possible potential near-term gain is that, or a complete change in business model. But I think it's interesting to listen to how they talk and look who's doing this. I fully expect we're going to see real businesses like MONEYGRAM and like Ripple get involved here, and it's not just going to be a real business like we've got a chart of KODAK up on the screen right now. KODAK, another company that's a real business run by a real technology guy and Jeff Clark. We'll listen to what they say and the details they give us about how that might work.
How much more often do you think we'll see this happening this year?
I think we'll be counting on both fingers and toes. So that's, between the two of us, that's at least, I don't know, 20? 40?
And,
more?
Right. And so we talk a lot about Bitcoin. We've talked now a lot more about Ripple and Ethereum. If there was one other cryptocurrency that you're watching, Corey, this year, what is it?
Well, I think let me turn the question on its head a little bit. I think one of the most interesting things here is the divergent notion. Are we going to have lots of individual currencies to work for individual markets, which lessens their value in some degree, right? If there's one currency for MOVIEPASS, and to translate that back to dollars, or to translate that back to Ripple, or to translate or XRP, or to translate it to Bitcoin, that gets to be a pain and lessens the value of that transaction. Or will there be lots of different things? Will there be a MOVIEPASS and a KODAK and a Long Island iced tea and a Ripple for finance? Will they have lesser value, or will they all congeal around a singular or a few big cryptocurrencies? I think that that's an open question. I think an interesting one that's important to figure out if you're looking at investing in or just understanding some of these ICOs.
All right, Corey Johnson, our Bloomberg editor-at-large, an emerging crypto expert. Thank you. Coming up, Facebook and Twitter under fire yet again, this time from shareholders. Why Arjuna Capital and New York State are focused on social media abuse. That is next. This is Bloomberg. This is Bloomberg Technology. I'm Emily Chang. Social media giants Facebook and Twitter are facing heat from shareholders, this time to combat sexual harassment of women on the platforms. On Thursday, Arjuna Capital and the New York State Common Retirement Fund announced that they had co-filed shareholder resolutions asking both companies to produce a detailed report on the scope of sexual harassment on their platforms. The resolutions also address the topics of fake news, election interference, violence, and hate speech. Joining us now, the author of this story, Bloomberg Tech's Selena Wang. Selena, thanks so much for joining us. So what are the arguments coming now from these shareholders?
So adding to the chorus of consumers and lawmakers, now shareholders are getting in and saying that Facebook and Twitter have not done enough to combat abuse and harassment on the platform.
It's about time, right? I mean,
it's very true. But this is particularly interesting because of the timing and also because of who's behind it. You have one of the nation's largest pension funds backing this. This pension fund holds tens of millions worth of dollars of shares on Twitter, over $1 billion worth of shares on Facebook. So this actually holds some weight to it. And they want to see more disclosures on this. And the argument is that this isn't just a societal problem. This is also a financial issue. As more women feel like they are being harassed or trolled, or feel generally that this platform is unsafe, this is going to cause people to vote with their feet and leave the platform. And during the news conference today, they cited the #MeToo movement. They also cited the Twitter boycott late last year as prime examples of this. And also, it's not a women problem either. It's a people problem.
Right.
On top of fake news and manipulation, people in general don't feel necessarily as safe going to these platforms as they're being subjected to this type of content.
what do these shareholders want these platforms to do?
So they want disclosures first and foremost, just like the lawmakers wanted earlier in last year. So basically the situation is they understand that these companies know they haven't done enough. Jack Dorsey has talked about it. Mark Zuckerberg said in his annual letter that his job is to fix Facebook this year. They get that. What they're saying is that it's not enough, A, and B, they haven't been transparent about it. So why doesn't Facebook tell them what these thousands of new workers are doing to combat harassment, fake news on this website? And so what's going to happen ultimately is there are a few options. The company could come to a negotiation with the shareholders, and it could eventually be withdrawn. It could end up going to an actual vote. It's unclear at this point.
Talk to us about the measures. Let's start with Twitter, that Twitter has taken so far, and how some of these newer measures are working.
So Twitter and Facebook both have historically taken this very hands-off approach, free speech, and as you know, they've started to change that over the past year, past several months. So they have made it easier for people to flag abuse and harassment, and they are saying that they are taking harsher action on these accounts, more ready to suspend them, temporarily block them. However, Jack Dorsey recognizes that isn't enough, and they are also working on many different measures in terms of the transparency side. Last fall, they said they would be unveiling this transparency center so that users would be able to know where the ads are from, who's backing them, how much money. But several months later, we still haven't heard any word about what the progress is or status on this transparency center.
And yet at the same time, you know, you have Twitter, for example, making statements that and new rules that sometimes seem at odds with this mission by saying, for example, that foreign leaders and leaders in general, government and world leaders, that their tweets can remain up no matter what they tweet.
That's exactly right. Donald Trump throws a whole nother wrench in this situation. I think it's also worth noting that in the past, Arjuna Capital has tried this method before. They have submitted various shareholder resolutions. The ones from last year did not receive a lot of shareholder support, but it is going to be different this time, probably just because of the overall environment, what's going on in the world in sexual harassment and in fake news and election meddling.
We shall see. I wish it were so, but we'll see. Selena Wang, our Bloomberg Tech reporter, thank you. Well, Google is planning a new push to vet top-tier YouTube videos that it bundles for major advertisers. People familiar with the plan said the move is intended to address recent concerns from clients over offensive videos involving children and some popular YouTube stars. Last week, prominent YouTube celebrity Logan Paul posted a video of a dead body from an apparent suicide in Japan. On Wednesday, Google announced that it had removed Paul's videos from Google Preferred. Coming up, online investment startup CADRE has caught the attention of Goldman Sachs. Why the bank is committing hundreds of millions of client money to this company next. This is Bloomberg. Earlier this week, Goldman Sachs made a big bet on what could be the future of banking. The firm announced it is partnering up with online investment startup CADRE, committing $250 million of client money to make commercial real estate investments through CADRE's platform. Ryan Williams, CEO of CADRE, is with us now from New York. So Ryan, what does this investment mean for you?
Thank you for having me. We're incredibly excited about the partnership. We believe it's really a testament to the value proposition of our platform of making real estate investing more efficient, more transparent, and more accessible. And to have a partner like Goldman Sachs, who we're honored to have on board, is really a great step in our overall mission of expanding access to quality real estate investments for more people through technology.
Where are your customers typically coming from?
Yeah, so we've been really fortunate to not have to do too much in the way of marketing. Most of our customers and clients are hearing about us through word of mouth. We're beginning to see a lot of network effects given the products that we're offering, and the results speak for themselves. So we have a bunch of inbounds that are through our website, cadre.com. And other than our website, really it's sort of network effects from referrals from other investors, primarily high net worth family offices and other institutions.
So, how many more partnerships of this kind will we see from you?
Yeah, so we're focused right now, first and foremost, on Goldman and really scaling and accelerating this partnership with Goldman. Goldman is investing with us because, A, we're able to provide them quality access to real estate, but there's a plethora of other opportunities that we've been thinking about expanding and scaling with them. So this is really the first partnership that we want to make sure we deliver on. But we do anticipate there will be other banks, other channels for other investment platforms and managers that we'll also pursue over time at the right time. But again, we're pretty excited about this partnership, executing and delivering great returns for a much wider subset of the investing universe.
You used to work at Goldman, Ryan, and I wonder how close you are to Goldman alums and members of the Goldman network and how sort of influential that was in closing a deal like this.
Yeah, we oftentimes say we have a ton of Goldman DNA at CADRE. We are fortunate to have the chairman of our investment committee, Mike Fascitelli, who used to lead investment banking globally at Goldman. John Winkelried, who used to be the president of Goldman, was really one of my first advisors. I worked at Goldman Sachs. One of our managing directors, Tom Stoltz, was a Goldman alum, and so that familiarity made a big difference. And really the other dynamic that made a big difference is Goldman invested in a couple of our earlier funding rounds. So they had really a front row seat and view into the performance and the execution of our company, the beauty of our product itself, and the power of our data team on the technology front. So we got very fortunate that really all the dots connected, and we're really excited for the future.
Given the John Winkelried connection, would TPG be another likely partner in the future or target?
You know, I'll tell you this, we've been surprised by the types of partners that have approached us. 3 years ago, when CADRE was first getting started, I didn't really anticipate this type of velocity in adoption of our business model. So there have been private equity firms of all sorts and varieties that have approached us. Right now, we're primarily focused on channels for individual high net worth investors, such as other investment banks. And so my guess, if I were going to make a bet here, would be that we will continue to work with Goldman and explore other investment bank partnerships as they arise.
Now, obviously, there's been a lot of political uncertainty. Tax reform, however, was just passed, and I'm curious how that will impact your business.
Sure. So, you know, with a lot of the tax reform, we actually think that there likely will be positive implications for owning direct real estate. There are structures related to sort of blockers and otherwise that actually provide unique tax benefits to our investors. Real estate as an asset class, though, is unique in that it does provide really high quality opportunities and tax adjusted returns. And so we actually do believe that the asset class, irrespective of tax reform, was compelling and attractive. And with some of the reforms, we think that even despite where rates will go, there are some structural advantages to participating in commercial real estate investing and really doing it through a quality platform, because it really is about who ultimately is overseeing your investments and serving as a steward for your capital.
And, you know, we've talked about this before, Ryan. Obviously, the company has ties to the Kushners. You know, curious how involved they have been and how involved they are at this stage.
Sure. So we have a ton of investors that have backed us since we got started. Thrive Capital, through Josh Kushner, is one of our investors. You know, Jared Kushner was an investor and partner early on. We have a ton of other investors from a wide range of political spectrums. And I think it's a testament to the really the enduring quality of our platform, the value proposition that really transcends the political spectrum. So we're going to continue to focus and continue to realize our mission of expanding access, and we'll put politics aside and focus on building a great business that will let more people realize, you know, their financial dreams and change the world for the better.
All right, Ryan Williams, CEO of CADRE. Ryan, thank you so much.
Thank you. Appreciate it.
For stopping by. All right. In South Korea, the justice minister reiterated his proposal to ban local cryptocurrency exchanges, fueling concern a state crackdown will cut demand for digital coins in one of the world's biggest markets. Zhao Changpeng, CEO of BINANCE, one of the world's biggest crypto exchanges, talked to Bloomberg from Tokyo about the rise of regulation in the region.
It does make a lot of impact to our business, but I don't think there's any particular threats. Korea exchanges are still operating right now. It's just that there's a potential ban. We don't know what the extent are, and we are actually away from that, so we should be okay for now. But it does probably impact some of the Korean exchanges. I've been trying to talk to them. They haven't responded to my requests yet, so we'll see how that happens.
Okay, but is there a feeling that the sort of ring is closing in terms of, tell me first of all why you chose to move to Tokyo and what the sort of events that led you to leave China were?
Okay, so in China, it's very clear that it's no longer allowed, and the government is against it, or at least there are policies that's hinting towards against it. So we generally don't like to go up against governments. So we moved out of China. We're actually not, I mean, Tokyo right now personally, but we are actually spread out around a few different locations. We have a presence in Taiwan, Hong Kong, and other island countries. So I think basically it's a little bit tough to decide where you want to be in this kind of environment. But before it was cryptocurrency exchanges are allowed, or at least they're not allowed. But now things are becoming tighter, so we just have to play by ear and see.
Okay, I mean the demand is obviously there. You guys had to halt new registrations. If I'm not wrong, you've recently restarted limited registrations. Do you think you'll get to a point you'll be able to open it up again?
Yes, absolutely. So the demand is extremely strong. We opened registration for an hour yesterday, and 240,000 users registered within an hour. So we're growing basically a couple of million every week in terms of users. We did not expect this kind of growth, to be honest. And our current core system is actually okay. Our exchange matching engine is actually really fast. But some of the other parts we're actually not catching up, especially on customer service. We would like to provide the kind of customer service that Bloomberg is able to provide, but right now we can't. So we're kind of holding a little bit, but we're actively ramping up our bottlenecks. So we're actively fixing that. So probably within a couple of weeks, we'll be able to fully open again.
That was Zhao Changpeng, CEO of Binance. Coming up, the company behind the Wall Street Decathlon is putting you inside the race. How the competition will incorporate streaming next. This is Bloomberg. Demand for personal computers rose over the holiday season for the first time in 6 years, buoyed by commercial upgrades and pockets of improving consumer demand. According to IDC, just over 70 million PCs were shipped in the fourth quarter. Well, D10, the Wall Street Decathlon, kicks off its 10th year in New York City this month, and the decade-old athletic competition is introducing new technology. For the first time, outsiders can now stream this race. D10 is unveiling NORMA, a streaming software giving a global audience a live mobile viewing experience. Joining us now from New York with all the details, Dave Maloney, founder of D10. So Dave, tell us how it all works.
Well, thank you very much for having me. So NORMA comes to life, or came to life, really for two reasons. The first was the D10 itself is a 4-hour event, which is pretty hard to show in its totality. Second thing is, when we built the D10, we built a software suite that allowed us to know where every athlete was on the playing field at all times. So if you take those two factors, what comes to life is we thought, how do we show this show to a global audience without requiring that audience to tune in for 4 consecutive hours? So NORMA gives the viewer the tool to tune in to the D10 or any live event at exactly the perfect time.
So will this be used for other sporting events as well?
It will. So really the NORMA is designed, she was originally built to solve a problem for the D10, but what we realized was there's lots of other rights holders and event producers struggle with the same issues that the D10 had, and NORMA solves not only ours, but theirs too.
Now, talk to us about how the technology actually works here. Are there cameras all over the events? Is it phone-based? How does it work? So
it's all mobile, right? So we're focusing primarily on that millennial viewer that is consuming far more content on their phone than they are on a television. NORMA works in two ways. NORMA can work, and she does in the D10 sense, as being a multi-camera, a user-enabled multi-camera system. So the user can toggle between our cameras to get the POV that they want. In addition, NORMA can serve as essentially the Intel inside to an existing rights holder's broadcast. So we're enhancing someone else's stream.
So, talk to us then about, where you intend to take this technology and the expansion of D10.
Yeah, so I mean, this technology, NORMA, in the perfect world, we're seeing, media rights holders and event producers figure out how to show their content to viewers who have now this viewing proclivities they want to watch a show in an unconsolidated way. You're busy, you have things to do, so watching a live event from start to finish is really tough to do. So NORMA can give a much larger audience an opportunity to consume live events in an unconsolidated way. Simply put, Emily, watch what you want exactly at the right moment. That's what NORMA does. And the D10, as a result, the scope of people that can watch it, increases exponentially, because now you're talking about a global audience.
And what about expanding to different parts of the country?
The D10? The D10 will do that. The D10 was originally, right, we're celebrating our 10th year in New York City, which is really exciting this year. But the D10 has expanded to Chicago, San Francisco, Houston, and we will add additional cities. We're looking at LA, Dallas, and others. And really the idea is to find those passionate, athletic, philanthropic, and also banking centers where the D10 can thrive and ultimately work its way up into a national championship format.
All right, David Maloney, D10 founder, thank you so much
Thank you for
joining
having
us.
me.
And that does it for this edition of Bloomberg Technology. On Friday's show, we'll be speaking with Congressman Ro Khanna of California. And a reminder, we're live streaming on Twitter. Check us out at Technology, weekdays 5 p.m. in New York, 2 p.m. in San Francisco. That is all for now. This is Bloomberg.